Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is Thursday the 4th. We had the export sales report out today, but before we get into that, let's turn over to the grain hedge trading platform and see where we closed off the day. Corn trading up 4 cents here, soybeans up 11 cents, and wheat in Chicago leading the charge higher here, up 12 cents on the day. When you look at the US dollar, you'll notice that we traded down for the better part of the day, thus explaining the candle on the very far right. You have a very long wick there, and what that means is we traded lower throughout the better part of the day and then rallied back, and you'll notice that we actually closed in the positive here for the US dollar. To me, that's positive. That sort of price action, especially after a sharp correction there over the last 2 days, I would suspect to see a little bit of a continuation to the upside. Movement higher in the US dollar typically puts a little bit of pressure here on US grains when it really affects the competitiveness on the global market. So in general, I wouldn't be surprised over the next day or two if we get a little bit of movement higher here in the US dollar, and that pressures grains just a little bit. But let's turn over to the export sales expectations. You'll notice old crop sales here, corn coming in below analyst expectations at 464,000 metric tons. That was below the 550 to 750,000 metric tons of expectations here. Soybeans came in on the low side as well for old crop with 130,000 metric tons. Analysts were expecting anywhere between 150 to 350, and wheat with cancellations here down 20,000 metric tons. Analysts were expecting to see cancellations that range from either 75,000 metric tons to 100,000 metric tons of sales. So in general, wheat wasn't too disappointing, kind of came in within what analysts were expecting, but corn and soybeans really not that positive here. Other than soybeans, I mean, we know that soybeans has an exceptional amount of sales this year, and let's actually take a quick look. If you look at the cumulative chart here for soybeans, you'll notice we've booked 50.09 million metric tons. This time last year we only had 45, and really the pace that we need at this point in the marketing year to meet USDA expectations is only 47.8 million metric tons. So when you look at the export sales for soybeans, it continues to run well ahead of pace, and on the 10th we should be getting a WASDE report. I wouldn't be surprised to see the USDA having to revise export sales up a little bit higher again. Let's take a look at the cumulative export sales here for soybeans, or for corn, excuse me. Corn here, 43.5 million metric tons exported here at this time of the year. Last year, we really only had 46.1. So we are behind where we were last year. We're ahead of the pace needed to meet USDA expectations. In general, there's nothing too exciting about these sort of numbers here. But when you turn your attention to wheat, you'll notice that really the last 4 or 5 weeks have not been very good for sales, really hardly any additional sales booked, but that was in line with what we would typically see during the end of the marketing year. This is the last day in the marketing year here or last report in the marketing year for wheat. So this is something, or last week in the marketing year for wheat. This is something that we need to pay attention to, and you'll notice that cumulatively we've booked 23.3 million metric tons at this time of the year. Last year we had 31.7, so we're way behind where we were last year, but we are still ahead of the 22.8 million metric tons forecast to be needed at this time to meet USDA expectations. So not terrible here for wheat, and I think part of the reason why we rallied here for wheat today, I think it really has to do with a few items. First of all, you do have Ukraine. You have some fighting erupting over there in eastern Ukraine after a number of months there in a ceasefire. And you also have India, a situation where they have very dry conditions, very hot conditions, and they're going into a time where they're supposed to be planting soybeans, supposed to be planting corn. That is potentially going to be very negative here for that crop, and we're going to have to see, because right now India is forecasting 88% of the monsoon. If you get really a reading below 90% of the average monsoon, you're looking at a drought-like year, and so that is concerning me. India is a major producer, not necessarily a major exporter, but a major producer of grains, and that could have an impact on the global supply and demand report, or the global supply and demand dynamics. Guys, if you have any any questions about what we talked about today, please give the office a call. The number is 877-472-4607. Remember, if you haven't done so already, take a demo of that 14-day free trial at grainhedge.com. See what it's like to have live quotes in the palm of your hand. Thanks a lot for tuning in. We'll see you here Friday for the weekly wrap-up and cash report.